we have seen, based on geopolitical tension, gold has rallied as the Bank of China continues to stockpile. Chinese central bank is not looking back on gold acquisition. Russian central bank is not looking back on gold acquisition. The Central Bank of India is not looking back on gold acquisition. So it is what it is, and at the same time they are accumulating silver. So let's look at a new strategy, and it's called a parallel channel strategy. The parallel channel strategy is based on roof and floor. It's based on demand and supply. So it's critical in the sense that you need to know when demand starts and when supply starts. And if you got supply, you trace all the highs of your supply and trace all the lows of your demand, right? And exactly what we are doing here. If you look critically, you will see what price has done, and you bring it to the floor, and you on sniper entry. Come on, come on, you on sniper entry, right? It's called parallel channel strategy. Now the buying will continue, and I have so many parameters which will serve as a litmus test. And of course, the market will have some couple of pullback, but it will continue until the roof of the parallel channel is completed. Now, the strategy is based on, like I said, demand and supply. So if you're going for demand, now you need to check how many demand do you have. If you're looking at supply, how many areas of supply do you have? So you need to join all the supplies. You need to join all the demands. This is character of market. Remember, our strategy is winning the market based on character. So we must live up to our strategy. So the idea in this market is to play from the demand point of view or from the supply point of view. Forget about every other thing that happens here. You are not allowed to trade it. The only trade you're allowed is to be on the supply zone or in the demand zone. Now the market is buying actively. What are we going to do? I have another point of reference where I want to see what the market does. Now we have, in this bearish drop after price creating a new all-time high, where you have seen price dip itself into 3,500 before we had retracement, right? So after that retracement, we have seen reinforcement and we have seen significant take profit where market tried to balance over sold market. It is critical to see that after market extend for a period of time, it gives opportunity for people to take profit and resume buying. The idea for correction is to lure people into the trap, into the lucrative trap of growing liquidity. But in reality, trading is not what they said it is. It is not what they told you it is. And I know it may sound a little bit awkward, but to be honest, it is not what it told you it is. So it's like we found a support, a resistance structure at this level. Let's look at it on 15 minutes. On 15 minutes, it looks like the market is showing a significant pullback on 15 minutes after price hitting a 15-minute supply. So we may look at it and may want to take advantage of that 50, 60 pip drop in price. So that's what I'm seeing at the moment, and we are looking at it. It looks like the market may have some correction, then set up again for another push in price. So we're seeing it. So we want to cover that lapse after price dipping itself into 17. Now the next thing we want to see is, as we anticipate a continuation in this buy, I'm interested in the last high before we dropped and picked up again. And this is the high I want. I want this situation because you see, we have series of all the supply roof. We have one, two, three supply roof and two demand floor. So for every of these, a potential sell, potential sell, maximum buy, giving you a clear profit. So I want to cut this team based on the structure of the market. This is what I want. And you bring it to the floor. It gives you exactly what you want. Let's take this out. But of course, it's correct because when we brought it to the floor, we had the first touch, we had the second touch, we had the last touch. The reaction is precise, following the bullish ascending channel. The first one was a descending bearish channel. Now we are moving in a bullish ascending channel. What makes it a bullish channel? We have a first touch, second touch, demand structure 1, demand structure 2, demand structure 3, demand structure 4. Now you see you are playing on the W structures where price have formed a reversal price action by way of double bottom. Each of those double bottom create a high, double bottom, a new move, right? So what's going to happen here is that we want to see price return back into that structure. If there be time, let's extend it to the right now. And I want to change the color code to differentiate it from what we earlier have, and I want to change this color to black. So I prefer that color black. So now the trade is set for us. Now the next thing you want to see is that this price will continue to move until price gets into 3,460, 465, potentially making here your next supply roof. So on technical, based on the power channel strategy, here is your supply roof. And I'm going to throw more light why here is a potential sell zone. Because the market is calibrated and trading is mathematics of pattern. It follows pattern, but at the same time, it drills your greed. If you are greedy, the chances of losing out in the market, it's very, very high. So it's something that is built around character. If you're a greedy person, the chances are very high you're going to get edged out because it will give, and at the same time, it will turn back and take it again. So we have used in a simple term to illustrate where you should expect your next sell. So there is a very high probability the price will tap into the current all-time high for a potential retest. But at the same time, we must recognize this price action. These price actions must be recognized because they gave birth to our roof. And we have cloned it using our power channel strategy to get the floor. Now, if you look here, you will see the selling at this level was based on double confluence. An ascending trend line meet a descending trend line. A breakout from that descending trend line that happens to be the supply roof of the descending bearish channel. Price have come to retest another price action at this level. Now you see we took note of this ascending trend line that met the descending trend line that sent price to this level, and we cloned that structure to bring it to the point where price has first formed the first W structure, and it has given us another beautiful price action. Ladies and gentlemen, the buying will continue until price heads into 3,460, 465. So we are going to look for more confluence. Now we have an ascending trend line. Can we get a horizontal supply roof? A break of that structure at that level will ultimately, we want to see if it coincides with our ascending trend line to make it a high probability trade. On 15 minutes, I switch on my line chart, you will see there's a strong break of structure at this level. And at this level, you will see there is a structure here. We have here a supply roof, break of a supply roof, price returns here on demand, break of a demand structure retest, and we have seen a significant sell up to this level about 3,205. So it remains an important point for us. So we are going to mark it and at the same time create a zone out of it and see if price returns into that structure. A return into that structure will most likely provide us with a sell opportunity. And I want to change the color. I prefer green this time around. So let's see what price does. So using 15 minutes, 30 minutes to make our analysis. Now you can see the market has broken from the descending trend line, retested it, and price continues to move without looking back. And for every time you look at it, you think you want to sell, it continues to buy. Now, this is another important point in the price rally. And we have seen after price broke out from that structure, it has come back to retest that roof and continue buying, keeping that bullish momentum. In fact, so let's also take note of that. That now you see we have an ascending bullish channel. You see, trading is all about probability. There is a very high probability that anything can stop price and price may want to come back. But if it comes back, the ultimate goal is to return price to this point. It still get to this point. This point must be experienced for the channel to be completed. Right? Now, just because we have called this an ascending parallel bullish channel does not mean that price will come there and sell immediately. Now, the market might decide to break it and a break of a supply roof make it a demand floor and the market will continue to buy. So this is what you might likely experience. So just because they are building liquidity at that level does not mean they will respect it. So price might reach there, break that level, and move on, even break the current all-time high. Or price might reach at that level. The presence of liquidity might just take the opportunity. Okay, since we are very close to the current all-time high, they move to the current all-time high, breaking away from that liquidity trap that has been serving as a supply cap, then pull back. That is what a lot of traders might consider as a fake out. So price might get here, break this structure, get to the current all-time high, and pull back. It's a very simple game. Very simple. So you must bear in mind that here becomes a potential demand floor. So if price is falling, it's going to come back into 3352.41 for immediate reaction. Well, the roof of this descending um, bearish channel remains an important buy floor. So in the future, if price returns, I want to extend it. I want to extend it to the right. So if price returns here, of course, there is a very high probability that price is going to trigger a buy on this floor. So at the same time, I want to mark it out knowing fully well that if price returns there, price might return there on confluence. If it returns there pairing with the floor of the ascending channel, it gives an opportunity to reverse, or price can break out completely and return back to the first demand floor where we started this current bullish rally. But from the look of things, there is a strong geopolitical tension between China and Taiwan, and it's a battle of supremacy. America is backing Taiwan, a strong ally of United States, and Taiwan is not a country to mess with. They prepared all along for any form of escalation from the big brother People Republic of China. So if such escalation is not tempered, it could lead to global financial instability. And this has seen a lot of liquidity influx into the yellow metal. And as well, we've been seeing some significant push um, for silver. Silver making significant push in price. And let's look at it again. There are a couple of 15-minute resistance structure From the right, you look here again, we could find another one. As much as they are not my preferred zone, but we must acknowledge it that there is a supply at this level. After break of structure, price returns here on demand. That is around 13 level. And there is another one again. We have another 15-minute structure at 3,418. You can look here. When you look back, you will see, and that market is reacting at that level. We have entered that market at 3,417, and it has dropped to 3,414, a 30 pip drop in price. So you look at that level, we have a support structure, break of a support structure, and the price could just use a temporary gain and continue to move. But my ultimate preferred zone is to see price return back to this roof. That is what I want to see. That is what I want to see. And if I see that, I will feel fulfilled. The price action at this level is very, very precise. Look at the price action at this level. We have here a supply roof, break of a supply roof, price returns here on demand. Break of a demand floor followed by a retest. And we had a successful sell, series of sell that brought us into 3,204. And we have resumed rallying again. So it makes sense to see price return back into this roof after testing it for once. And if it comes there, we want to see it coincide with this ascending trend line. This ascending trend line picked up its supply structure from this level and have sold down. And you see there's a break of structure from the bottom. We have here as a demand structure, break of a demand structure, supply. Break of a supply, price turns here on demand, right? So it makes sense to see that price returns here. And if it returns here, it will be on double confluence, right? The double confluence is going to be on this ascending trend line, meet another ascending trend line. That could provide some kind of a sell momentum where price might likely, just like I said, price might ignore all forms of strategy and move directly into the current all-time high and start to reject from there. But a rejection after tapping into the current all-time high, if we have a break again after price dipping itself into the current all-time high below this structure, it will be a significant sell drop. So this is how we see. Please feel free to come to the comment section. Let's brainstorm. Let's know what you think. Let's know your perspective. Let's know what you think about the market. At the end of the day, criticism is part of the market, and it makes you enlightened and gives you an opportunity to understand the market in the right way.